Hello Wolfpack, bit of a different video today. I'm going to be talking about DCA'ing. I'm going to be talking about the hold mentality or the HODL mentality. I'm going to be talking about why that's not necessarily the best route to take, regardless of what people will tell you on YouTube and Twitter. Now, not everyone, right? A lot of people are traders. A lot of people like trading. They like swing trading, scalp trading, anything that lasts less than a few months they like doing, right? And all the way down to day trading, intraday trading. That's what they do. However, I would say that the vast majority of people and the vast majority of analysts on YouTube and crypto Twitter and the vast majority of people in the cryptocurrency space are more like holders. Why are they holders? Because they lack the experience in trading and hence they're not willing to commit to trading because trading is too risky for them. But they don't understand that holding and DCA'ing, in my opinion, is almost just as risky when it comes to assets as altcoins. In fact, way more risky. And when it comes to assets like Bitcoin, it's very lackluster. And it's not actually going to get you very far. I'm going to be looking into some charts today. I'm going to be looking into some of my opinions. I'm going to tell you why I think that. Before we get into the video, if you want access to altcoin trading signals, a 2-hour video on market psychology, and a weekly newsletter, as well as access to prioritized reply to comments, badges, and stickers, etc., the whole 9 yards, go ahead and click the join button in the pinned comment below or on my channel page, and you can join via YouTube, Wolves of Crypto VIP. If you want to learn how to become a trader, if you want to learn TA for yourself, if you want to take advantage of this bear market and actually improve your skills, go ahead and check out the Crypto Academy, where you can learn TA through a 10-unit course developed by myself and Mega Crypto. Without further ado, let's get into the content. What is DCA'ing? Right, so DCA'ing is a long-term investment strategy, and it generally means you're going to be holding that asset for a long period of time. Now, if you hold an asset for a long period of time, you need to have a significant amount of faith in that asset that it's going to perform over a long period of time. Immediately, there's some problems in that, but before we get into that, dollar cost averaging, essentially, you have an investment amount, say you've got $5,000, instead of putting $5,000 all in, say, Bitcoin, in one singular price, you're splitting it up into certain segments. For example, splitting it up into 5 $1,000 segments, and then you're investing that each $1,000 segment at a different price in order to get an average price. This way, there is less pressure on you as an investor to find the absolute perfect price to put your entire portfolio into. Whereas you can just average it in, and then you end up with like a bit of a mixed price where it's a bit of a dollar cost, average range. So, for example, a DCA'er or a long-term holder, they kind of go hand in hand to a certain extent, I suppose. But mainly a DCA'er, say you have $5,000. Okay, let's remove this chart. Each red line is a $1,000 investment. So Bitcoin's dropping. You're like, okay, Bitcoin's dropping. I don't know exactly where it's going to bottom. I'm not going to try find out where it's going to bottom. I'm going to put $1,000 in here. I'm going to put $1,000 in here. I'm going to put $1,000 in here. I'm going to do 1,000 over here as well. And then I'm going to do 1,000 over here. And your total $5,000 has been invested at this point, and your average out of these 5 investments would be somewhere in the middle. Let's just say this is your average price that you bought into Bitcoin. So you've DCA'd the entire way down on Bitcoin, and now you're left with an average price of 47,000. Now, one of the problems with DCA'ing is, what if the asset doesn't stop dropping, right? And this is the problem with the entire crypto space right now, because everyone keeps telling you, everyone, particularly permabulls and people who like long-term holding, that, hey, yeah, Bitcoin price is going down, more discount sales for me, I'm just going to buy these up. It's a stupid mindset, right? Because there's no guarantee that Bitcoin is going to return to those prices at all, let alone anytime soon. People act as though Bitcoin is this asset that's just never going to go away. It's just always going to be there. And, blockchain technology is always going to be there for sure. But, to look at Bitcoin, it's only a decade old, and to look at that and say, this is never going away, this asset is going to be here forever, is one of the stupidest things I've ever seen in my entire life. Now, with that said, I long-term hold Bitcoin. I've got a long-term bag of Bitcoin. I have faith, personally, that Bitcoin will continue going up over the macro trend. I'm not bearish on Bitcoin on a cyclical basis. However, I understand the fact that there is a chance that I'm not correct. And there is a chance that Bitcoin just goes down and stays down forever. Now, even if it doesn't go down forever, right? There is a solid chance, if not it is the trend, that Bitcoin, generally speaking, in a bear market, does not return to those bull market prices for at least 2 to 3 years. So, now you've invested $1,000 in 5 separate places on the Bitcoin chart during this drop. You've got an average price of $47,000. And guess what? Bitcoin's down here at $29,000. You've got no money left to DCA. And Bitcoin will probably not get back up to $47,000 for 2.5 to 3 years. So basically, you've thrown away the money. Okay? You might get it back in the future, But until that 2 to 3 years comes, you've thrown away that money. You cannot use that money for anything else now, right? That is for negative long-term holding. That's for negative DCA. Not only DCA, but long-term holding. If you're investing a long-term hold position, if you get $10,000, you chuck in Bitcoin, you're keeping it there for as long as it takes until it gets back to that price, right? You cannot do anything with that money in the meantime. Whereas as a trader, if you put the time in, you put the effort in to learn how to trade, to learn TA, yes, it's not going to work 100% of the time. That's for sure. Nothing works 100% of the time. But you're going to be getting in at a much better price, and you're going to be understanding that you need to have a risk-reward ratio for each one of your investments. So a DCA would look at the market like this, okay? They would say, all right, Bitcoin's dropping. This is a discount. I'm going to start buying. He'll buy here. He'll buy here. He'll buy here. And he'll buy all the way to the bottom. And say Bitcoin is bottomed out right now. He'll buy here as well, right? So Bitcoin's bottomed out. It's all good. He's got an average price of like this pink line over here, okay? And we'll delete these DCAs. So that's his average price there. And now a trader would think, okay, I'm going to try and wait and find the Bitcoin macro bottom. So he wouldn't have bought any of this way down, and he probably wouldn't buy the exact bottom either. He'd wait for confirmation. Bitcoin will break upwards. That would be his confirmation. He'll buy here, and he'll say that, hey, if Bitcoin drops below a certain price, I'm going to sell out of investment. So he has a maximum percentage loss. So say Bitcoin goes ahead and drops down below his purchase price, and he's not happy with the trade anymore. He cuts his losses. He cuts it out. He only loses a few $1,000s, right? Whereas the guy who bought up here for DCA'ing, he's just saying, oh yeah, I'm long-term holding. I don't care what happens. You know, this position's a 5-year position anyway. Bitcoin could keep dropping, and it could keep dropping indefinitely, and it could not get to that price region for 2 or 3 years, or it may not even get back there at all. And then all of a sudden, he's locked up his money in a safe that he can't open for at least 3 years, or he's burnt his money and flushed it down the toilet, right? So the benefit of being a trader is, yes, it's more stressful. Yes, it takes more time and education and effort, but you have to have this critical understanding in investing that there is a chance that you're going to be wrong. And as a trader, you have that understanding and you have the invalidation points. You buy Bitcoin and you say, if it drops below this price, I'm going to sell out so that my money isn't locked up in this trade for years and years and years or indefinitely. Long-term holders and DCAs don't have that, right? And again, even on the occurrence that Bitcoin continues going up forever, it will still have 3-year bear markets as per the 4-year cycle trend, which is very much a trend at this point. And so if you're DCAing at these high prices, all you need to do is zoom out, right? Let's go to the Bitcoin macro chart quickly. I've got it over here, actually. Let's go to the 4-year cycle chart on Bitcoin. Okay, all you need to do is zoom out. People are thinking that, hey, you know, it's just ridiculous to me. They're thinking that, hey, Bitcoin's tanking, it's a discount. Look where you're buying in comparative to the macro trend, right? DCA'ing got an average price of $40,000. Look where you're buying in comparison to this macro trend. And you could say, well, the macro trend is upwards, so eventually I'm going to be in profit. And yes, you may be. But look how long you had to wait to be in profit on previous occurrences. For example, in 2014, if you were DCA'ing, your average price would be around here, right? We took a period of about 2 years to get back to that average price. Right, 2018, for example, if you're DCA'ing, your average price would be around here. We took a period of about, let's see, again, almost 2 years to get back to that average price, and only to decisively break above it, it took about 3 years, right? So you're literally throwing years down the gutter. You're not only, yeah, you're making money in the long run, but it's not a massive amount of money, and also you're throwing away the potential money that you could be making with the money that you've locked up in that investment because you're lazy. That's what it falls down to. I think it really is what it falls down to. When I think about long-term holding and I think about DCA'ing and I think about all these things that people are doing, I generally think, and I hate to say it, I generally think it's just laziness. It's just a lack of education. It's a lack of willingness to learn TA and actually get in at a better price and have invalidation points. And it's just a brainless way of chucking your money in something that you honestly think is just going to go up exponentially over time, when in reality, that certainly is not the case, right? Now, all of this is not to mention the fact that, for example, long-term holding in Bitcoin and buying Bitcoin, DCAing Bitcoin, is not actually going to give you the best return on investment if that's what you're concerned with. Now, I understand some people are concerned with the fact that Bitcoin's a store of value, and I mean by definition it is. But I mean at the same time, a store of value going down 80% every 3 years is not necessarily the best case scenario if you need that money immediately. But long term, yeah, it's a store of value, and I understand that for sure. And people who see it as a store of value, go ahead, long-term hold DCA. People who see it as an investment, right? If you're looking at this as an investment, you're getting an average price on Bitcoin. For example, if you're DCAing on the way down in 2014, your average price would be around here, right? So your average return on investment if you're holding this, right? For example, let's actually use a more recent example, okay? So most people, the vast majority of people wouldn't even have heard of the word Bitcoin before 2017. That's when it hit mainstream popularity, okay? So the vast majority of people in the market currently probably entered the market sometime in 2021. Okay, so let's say they entered the market during peak bull run in December 2020. This is the vast majority of people. Okay, so they started DCA'ing Bitcoin in December 2020. More likely, they just YOLO'd into altcoins and lost a bunch of money. But let's say they were a little bit smarter than that. They started DCA'ing Bitcoin in December 2020, right? They DCA'd at a variety of different prices all the way up here, on the way ups and the way down. And now their average price sits at around, say, $44,000 per Bitcoin, okay? So even though they had spent 2 years of their life DCA'ing Bitcoin, they are still down on their investment. Okay, they're down on their investment roughly, well, they were at the peak 40% after 2 years of DCA'ing Bitcoin. Yeah, if you zoom out and you say, oh, what about 2017? They're doing it for 5 years. Yeah, okay. Let's say they've been DCA'ing for 5 years, okay? They entered during the peak bull run in 2017. Okay, so they end up with an average price of, I don't know, $3,000 per Bitcoin. Now, they are currently up on their investment 600%. And you think, wow, 600%, that's pretty good, right? And yeah, in comparison to most assets, it is pretty good. However, if you look at the price volatility in the market during this period of time, and you look at how many altcoins have run in and out of the system, if you had experience in trading, you could have made 600% in literally 2 months during this bull market. Less, a month, less, probably 2 weeks during this 2017 bull market. So yeah, on paper, 600% gain in 5 years is a good investment, but relative to the rest of the cryptocurrency market, which is the market that you are investing in, it is absolutely shocking, right? And that's just Bitcoin. So my advice to you, if you're interested in DCA'ing, in long-term holding, whatever, you can long-term hold an asset, just don't DCA at these crazy high prices. And the way you do that is you have an understanding of TA, because if you don't have an understanding of TA, you can't understand that these are crazy high prices to DCA at. What you want to be doing is DCAing near the macro proven bottom, right? Which is for 200-week SMA. Okay, you DCA near these prices here, this green line. That's where you start DCAing, because that's where the macro bottom generally is on Bitcoin. That is a reasonable place to DCA. You don't DCA up here at 60K because in 10 years this will be worth it. In 10 years it won't matter if you buy Bitcoin at 60K or 30K. Well, actually, it definitely will, because there will be a period of a few years where you're going to be massively down in your investment if you buy it at 60K. And also, if you buy it at 30K instead of 60K, guess what? You're going to have double the money and double the Bitcoin in 10 years. So don't fall for these stupid kind of one sentence, a one-liner kind of, DCA. It won't matter what price you buy in 10 years. It's like, of course it will. This is investing. We're looking for return on investment with little risk. We're not looking for these random kind of quotes that people are chucking around. And I will add that the only reason people say stuff like that, there's no difference buying at 50K or 40K. The only reason they say stuff like that is to cover themselves, right? Because people who are permanently bullish on Bitcoin, right, they can't be wrong if they say things like that. There's no way they can be incorrect. There's no way people can criticize them. If I'm constantly bullish on Bitcoin and it goes down 80%, I can just fall back on that. Well, it's not going to matter if you buy it at 30K or 60K. It doesn't make sense. We're looking for return on investment with little risk. We are investors. We're not brainlessly throwing our money at something that's going to go up exponentially. That's not how it works. We need to have invalidation points. We need to have investment targets and prices, etc. We need to have time frames. And we need to, most of all, be making the most of our money. As an investor, yeah, 600% gain in 5 years, it's bloody excellent in comparison to the traditional markets. But in comparison to the rest of the cryptocurrency market, it's pretty bloody appalling, especially if you know TA. You could 10x that. You could 100x that. That's just my 2 cents on this matter. And then that's Bitcoin, right? That's Bitcoin, okay? So when we look into something like altcoins, dollar cost averaging altcoins, long-term holding altcoins, it doesn't get more ridiculous than that. And I'm going to show you a chart right now to prove it. Here is a screenshot of the CoinMarketCap chart and what it looked like in 2018, right? January 2018, the peak of the last bull market. These were the altcoins that were popular in the peak of the last bull market. This is the top 200 altcoins here, okay? As we scroll down, we realize that all of these altcoins are dead. Okay, we might find a few. Chainlink, for example, that's one I can see here. You can see Request. These are pretty popular altcoins. These ones have still survived, but the vast majority of these coins are unrecognizable to this day. These aren't random coins. These are the top 200 coins in 2017, 2018. These are the most promising coins of 2018, right? And if you fell for this trap of Don't worry about the price, just DCA. You would be exponentially down in your investment to the point of no return. Altcoins are very, very risky assets, more risky than Bitcoin, and there's absolutely no guarantee that you DCA'ing an altcoin at bull market prices, by the way, is going to be beneficial in the future. And even if it is, you're locking that money up for years and years and years, waiting for your return on investment, and the return on investment might not even be that big. Whereas you can just take that time and learn to trade and be in and out within a few weeks and minimize your risk and actually cut off the maximum risk you can ever have. There's no risk of the coin failing, right? This is one of the things as well, right? If I'm a trader, right? If I'm a trader, and it could be like macro trading as well. It doesn't have to be like, short-term trading. If I'm a trader, there's no, concern in me thinking about if Bitcoin dies. I don't really care if Bitcoin dies. Obviously, as I'm talking as a trader, as someone who owns a YouTube channel, of course, and I like Bitcoin, I like cryptocurrency, of course I care if it dies. But for my investment, strictly speaking, if I buy Bitcoin at 30K and I say, okay, if it drops below 25K, I'm selling. It doesn't matter if Bitcoin dies out and never returns to 30K over again, because I've got a maximum risk and I've weighed up the maximum reward. If I'm a long-term holder and I buy at 30K and I say, I'm not going to look at the price for 5 years, you're basically sentencing yourself to, first of all, 5 years of locking up your money where you can't make more money with that money, or, losing all the money, right? I'll kind of leave you with this, because I think I've talked too much about it. I think you guys get the main points here, but I'll leave you with this, right? Okay, so generally speaking, people say that success is determined, or financial success is determined by someone's ability to make their money make money. You can't make your money make money when it's locked up in investment that may be down for a period of 3 years straight. That's on a regular basis according to the macro time frame. Long term, yeah, you're going to make money. But why don't you just flip that into the short term? Why don't you take a few months out of your life, learn how to trade, learn TA, put yourself in a much better position, and free that money up and make more money on that money, rather than just brainlessly putting in an ETF portfolio or a long-term Bitcoin investment. It doesn't necessarily make sense to me, okay? And I'll leave you with that. Now, a lot of people are going to disagree with me on this. You can disagree all you want. I'm not talking about my opinion. I'm talking about the objective reality of the situation. Not once have I put in my little opinion here, right? I've put in my opinion, I think people should learn how to trade, but mainly I've been talking about the objective realities, right? If you're DCA'ing, you're most likely not going to be a profit for 3 years. That is the historical trend for Bitcoin, okay? And you can say, well, what about if I DCA in the bear market? Guess what? Not many people do that. You're not, generally speaking, you're not the minority. You're the majority, right? You're going to be DCA'ing when cryptocurrency's hot in the bull market. You're going to end up with an average price of, 40K if you've been DCA'ing in this bull market, or probably more than that, 45K, 50K, right? So, I'll leave you with this kind of final note. I know I said that before. Instead of wasting your time DCA'ing, instead of wasting your money DCA'ing, instead of losing access to your money DCA'ing, with the significant risk that you'll never get it back, or it may take years until you get it back, take a few months out of your life, learn how to trade, and learn what levels are critical to DCA at. I'm not saying don't DCA, I'm saying don't brainlessly DCA, and don't act like it doesn't matter what price you buy Bitcoin at, because it definitely does. Thanks for watching. I'll wrap it up by looking at the BitGet Exchange. Now, if you want to learn how to trade, and you are a trader, this is the exchange for you, because futures exchanges are exchanges for traders, not for long-term holders, generally speaking. And BitGet is one of the best futures exchanges in the market. In fact, that's what it advertises itself as. Even in the title here, Better Trading, Better Life, 100% agree. So it's got half the fees of Binance in futures and spot. They also have spot trading here. And it also has systems in place to avoid scam wicks, which means you can't get scammed out of your positions by random exchange wicks up or down that liquidate you. This is by far one of the best futures exchanges. If we go to the futures kind of what would you call it, interface here, we can see it's very clean and simple. It tells you how to do it first and foremost. Very clean and simple. You've got the coin pairs, over 100 coin pairs here, ready to trade, ready to go. One of the most, some of the most popular coins in the game here, some of the most volatile coins in the game, handpicked by traders, for sure. An easy, simple to follow interface, as well as a trading interface where you can do some TA for yourself on this exchange. Highly recommend you check out BitGet. Use my referral link in the description below. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers.